All right, Stackmode Chris here, and this is going to be everything that I wish I knew when I started buying and selling stocks within the stock market. So it can seem daunting, but it's definitely a powerful way to build wealth over the long term, and it requires a lot of patience, humbling yourself, being close to God so you don't lose yourself or your sanity, and just being disciplined. So what exactly is a stock? A stock is also known as an equity, and it's a security that represents an ownership stake in a company. And when you buy a company's stock, you become a shareholder and you own a tiny fraction of that business. And as a shareholder, you're going to be entitled to the portion of the company's earnings, okay, so the company's money they make, and assets, proportional to the number of shares that you own, okay? So the more shares that you own of the company, the more piece of the pie you'll have. So the primary goal of most stock investors is to profit from the appreciation of their shares over time as the company grows and becomes more valuable. So imagine this, for example. So if I have a pie, okay, let's say the pie is called stack mode pies. Okay. So stack mode pies, the name is going to be the stock. Okay. Whatever the name is the stock. Okay. So stock is essentially the name. Okay. Say I own 50% of stack mode pies and I own 5 million shares. Okay. So shares are going to be the percentage ownership. Okay. And then there's going to go ahead and be directional bias. So if I said I was going to hand out 4 slices of pie today and I was correct, then that's going to pretty much be an options contract. Okay, a stock options contract. So options contract, you're getting paid to pretty much predict price within a good time manner. Okay, so that's the difference between all of them. So for example, imagine a company, okay, Stackmode Network. Let's say we decide to sell 100,000 shares to the public, for example. And if you buy 100 of those shares, okay, you'll then own 0.1% of the company. And if the company's value grows from 10 million to 20 million, your shares value will likely double as well. So having an investor's mindset is going to be extremely important. Don't hop on the market thinking that it's a quick money grab, thinking that it's a quick get rich scheme. No, it's going to require discipline, day after day after day after day after day after day after day, repetition, not giving up, feeling like a failure. Okay, so many times where I just felt like I just wasn't for me, felt like I wanted to stop and was just feeling unmotivated, but I kept pushing through. I knew there was an end goal to it. And now, alhamdulillah, we're seeing green profits. Okay, so having an investor's mindset, having a resilient mindset is going to be extremely, extremely important. You've got to be patient. Okay, always be working on some other business or something like that while you're in a trade. Okay, you can't sit there having anxiety about the trade all day. You can't put yourself in lock. Okay, you got to keep going, keep flowing, keep building the wealth. Okay, inshallah. So investing is not about getting rich quick at all. It's about building wealth patiently and systematically and logically. And the biggest enemy to a new investor is often just their own emotions. Okay. So key principles of the mindset, long-term perspective. And think of terms and years, not days or weeks. Short-term market fluctuations are normal and often unpredictable. And true, wealth is truly built over decades, not quarters. Even if you run up $8 million, for example, in 2 years, okay, if you're not disciplined, if you're not structured, you don't know how to continuously win trades. Let's say you hit a couple meme coin plays, right? If you don't know how to continuously win trades, put the money away for taxes, budget, reinvest, you could end up definitely destroying that. Okay, you could destroy any amount of money by being undisciplined. Okay, so have a long-term perspective on it and avoid emotional decisions. Do not panic sell when the market drops. To the left to right chart. Okay, if the stock market or crypto market goes down, understand that inshallah, especially if it has value or something called market cap. Okay, market cap is going to show you the number of how valuable a company is. Okay, so if something has a high market cap, okay, and certain things occur on all of them, then you know it's also going to be something that you want to be looking at too. Okay, so a lot of the high market cap stuff can have decent volatility, okay, and embrace that. Okay, the market's going to go up and down, and volatility is a natural part of the investing landscape. And you can view market downturns as potential opportunities to buy quality assets at a discount, also known as the dip. Okay, so if the dip is happening fast, people think price action is just willy-willy. Okay, so if you see your 4-hour candlesticks curling upward, daily candlesticks curling upward with closes, you know that you might as well find the low. make your take profit an area of resistance or support above current price. Okay, and just take your time. Okay, so taking my take profit is something that I wish I stuck to. I would hit take profit, but sometimes I would get greedy, hold past it, okay, or try and make 10 bands in a day instead of being happy with the 900 that I just made. Okay, I've had instances like that too. Okay, so it's about instances of being grateful, and this is why just reading the wisdom that God has left here for us, Quran, etc. So it's really just going to help us put everything together and lock it all down and understand, like, okay, I can't just be playing with my money emotionally. I actually got real people to protect and provide for. I gotta be serious with my trading. I gotta be serious with my money. Okay, and trade with this mindset. Never trade with the mindset of, oh, I'm trying to make some money. Not trade with the mindset of, I'm not going to lose money on this trade. Okay, and do your own research. Okay, never blindly follow a stock tip from a friend. Instagram. Okay, there was times where I traded in a group of friends. That was before I even started mentoring on YouTube. Okay, I started off mentoring a group of friends, okay, and then they told me that I should start taking it on the internet. Okay, but that's how it started at first. Okay, started helping people get funded. Okay, after I figured out how to get funded and stuff like that. Okay, but trading with friends sometimes can lead to bad decisions if you don't do your own research. Okay, because no one is perfect, only God is perfect. So sometimes, like, especially if they're not studying more than you, okay, just try and stay in your own lane and your bag and your investor, okay? Study from your mentor, okay, and just stay locked in with your mentor and focus on the charts, okay? So God got you, okay? Find yourself a good mentor that you can trust, okay, and just trust your vision and your view, okay? Don't be arguing with anybody who doesn't believe in your view. So understand what you're investing in. So fundamental investing concepts. So to navigate the market, let's understand the language of it before we're just on here lost. Here's some of the most critical terms and concepts you'll encounter on your journey here a lot. So stocks, once again, stocks represent ownership in a company. They're higher risk but higher potential return, and you can participate in the company's growth. So if you catch a good company at the low, let's say you catch it at $32 a share or something like that, okay, and then price decides to go to $100 a share, okay, you would make a large percentage gain on your money. Okay. Why? Because $32 a share went to $100 a share. Okay. That's a 68-point jump, if I'm not mistaken. Okay. So it's a lot of points, a lot of percentage gains to go ahead and be paid off of. So with stocks, you get paid as price decides to go in whatever favorite direction you purchased it in. Okay. Whether be it you're wanting it to go up or down with the options contract, for example. So bonds are debt and stocks are equity. So bonds, they represent a loan to a company or government, and they're lower risk but lower potential return. And you receive fixed interest payments over time. And think of it as being a bank for the company. So let's talk about market capitalization, a very, 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 very popular term. Market cap is the total value of a company's outstanding shares, and it's a simple way to gauge a company's size. So a large cap is going to be anything over 10 billion. Mid cap is 2 billion to 10 billion, and small cap is generally considered below 2 billion. Okay, so small caps can be high risk, high reward because no one's really found them yet. But if you catch a small cap and it turns into a large cap, you'll be rolling in some dough, inshallah. Okay, mid caps, they have some higher growth potential. Okay, but they can also be more volatile since it doesn't have the most value. Okay, and large caps generally more stable. They do have a lot of volume though, so if price wants to correct, it'll definitely correct. So if it wants to dip down hard, it'll do that. So the art of research, okay, fundamental research versus technical analysis research. There was times where I only traded earnings, for example, okay, and I would just do research on the company, on the earnings, and that's fundamental analysis, okay, and then I started just trading with the charts, okay, and that's technical analysis, okay, and both are going to be needed to mesh together the ultimate plan, trust me. So fundamental analysis, let's talk about what it is. So this approach is a company's intrinsic value, and you'll analyze its financial health, management, market share, and competitive landscape. Okay. And you're looking for a stock whose price is below its true value, believing that it's going to rise over time by helping people in the future. Okay, and putting smile on people's faces, inshallah. So some key metrics: the price to earnings ratio, also known as the PE ratio. Okay, earnings per share, and return on equity, also known as ROE. These numbers tell a story about a company's profitability and their valuation. So for a PE ratio example, if a company's stock is trading at $50 per share and its EPS is $2.50, the PE ratio is $50 divided by $2.50, and that equals 20. And a low PE might suggest a stock that is undervalued, but it could also signal poor growth prospects, and it's a key piece of a larger puzzle. Put together what you wish. In technical analysis, this approach ignores a company's fundamentals and instead focuses on chart patterns, such as waiting for support to be broken, turn into resistance, or resistance being broken, turn into support. Okay. So instead of focusing on chart patterns, fundamentally, you could focus on chart patterns technically. Okay. And that's technical analysis. Okay. So technical analysis involves chart patterns, trading volume, studying the market momentum, and how the candles are moving. And technical analysts believe that all relevant information is already reflected in the stock's price. Okay. And the golden rule, diversification. Okay. And I also wish I was just saving way more money too. I would buy a bunch of Bitcoin, but then I would always just sell it. And I was like, dang, okay, everything that I've been buying and selling for the past 3 years, if I would have just held it, okay, then I'd be very, very up. But I'm glad I didn't do that because I get to teach this lesson here today. Okay, so the golden rule, diversification. So one of the most important lessons is to never put all your eggs in one basket. Okay, so don't just put all your P&L into just one share play. Okay, diversify a little bit, maybe like 1, 2, 3 plays at max. That's crypto and stocks included. Okay, 1 to 3 digital plays max. And diversification is the strategy of spreading your investments across different assets to mitigate risk. And when one investment performs poorly, another may be doing well, helping to balance your portfolio's overall return. So I hope you invest across industries. Don't just invest in tech, consider healthcare, consumer goods, energy, and finance. Different sectors react differently to economic cycles. Okay, so as of 2025, when this is coming out, we're in like the AI cycle. Okay, so AI stocks, for example, are super popular. Okay, or crypto brokers. Okay, anything allowing people to trade cryptocurrency, it's going to be popular too. So invest globally. Okay, the US stock market is not the only one. Consider international stocks to capitalize on global growth and reduce country-specific risk if you want. And use ETFs and mutual funds. Okay, these are powerful tools for instant diversification. An exchange traded fund, an ETF. That's a basket of securities you can buy and sell or an exchange, just like a regular stock. An S&P 500 ETF, for example, gives you an instant ownership in the 500 largest companies. Okay. And mutual funds, a fund managed by a professional, which pools money from many different investors in a variety of assets. So here's some common mistakes I knew. So chasing hot stocks, okay? So especially after I made my first couple bands with like C3 AI, say seeing that, okay, making my first like flip like that, okay, I was just like, okay, whoa, trading can be super duper popular. But then after that, I ended up losing profit just buying some stupid stocks that didn't end up going anywhere. So be careful chasing hot stocks. So stocks that are currently making headlines or being heavily promoted are often already way overpriced, and the smart money has already made their move to go ahead and exit. Because remember, it's a left to right chart. So it's about who sees it first. And inshallah, I want you guys to see it instantly. And market timing. It's nearly impossible to consistently predict the market's short-term movements. And trying to buy at the absolute bottom and sell at the absolute top is a fool's errand. And time in the market is far more important than timing in the market. So ignoring your plan can sabotage you too. Many investors or traders have a solid plan. You know what you want to do. You know what your criteria consist of, but are you following it? Okay. Panic and greed could really lead you to abandon your trade, okay, or even frustration. Just why am I not winning the trade? Not accepting the fact that you lost instead of sticking to your clean setup criteria. Okay. If you're struggling, head over to Stackmode.net, but I really do assure you play break and retest. Okay, you could wait for support to be broken, turn into resistance, or you can wait for resistance to be broken, turn into support. Okay. And that's it. Just keep it simple. Okay. Don't destroy yourself over the charts. Please keep it simple. Set a strategy. Okay. Stick to it, regardless of the market noise or whatever's happening. And investing when you can't afford to lose. Never invest your emergency fund or money you need in the next few years. The stock market is for long-term capital that you're comfortable seeing fluctuate. Okay. So opening a brokerage account. A brokerage account is a financial account where you can buy and sell stocks and other securities. Okay, you can't just go to the company and buy shares. You got to go to the broker to facilitate the transaction for you. Okay, so brokers, you can check about their fees, see about their rules, see how their support is. Okay, and then you're going to be able to get a card. Okay, certain of them, like Robinhood, for example, offer a card where you can go ahead and use your day trading profits or whatever profits that you make from the market and withdraw straight on the car. So whatever broker that you want to use, go ahead and use that. Okay. So open your broker. You can start small. Okay. Don't just dump all your money. Okay. Take your time. Make sure you know what trades you want to invest to and do your research. Okay. Even if it's worth it to spend your money on education, mentorship first, and then come into the market. Okay. This way you're not going to have to get your education by just losing over and over again. Okay. So in dollar cost averaging, okay, so the most powerful strategy for beginners. And instead of trying to time the market, you just invest a fixed amount of money at regular intervals. Okay, and this ensures you buy more shares when prices are low and fewer when they're high, averaging out your costs over time. Okay, so make sure you guys know where you're purchasing. Okay, if you're not purchasing at the right time, that could really jurisdict your trade and really just sabotage certain things that you need. Okay, so focus on ETFs and mutual funds. So for your first few years, you can focus on a core portfolio of low cost index funds or ETFs. Okay, that's going to be something to diversify too, especially as you're learning the market. So if you're new into the market, you still don't understand certain day trading while you're getting educated and stuff like that, ETFs can be something that you can look into as well too. Okay, so I wish I looked into more long-term stuff when I first started trading instead of just worrying about the instantaneous profit of like 0 DTE options. Okay, so look at long-term stuff because a lot of the time while you're learning the markets, you can still make money in these long-term plays, and your money a lot of the times is going to be a lot safer versus you just trying to throw yourself head into 0 DTE or something like that, or futures, and then losing everything. Okay, so that's where I wish I corrected myself. Okay, so start now. Okay, there's going to be no time limit, okay, to when you can start or end trading. Okay, you can trade until you pass away. Okay, and you can start trading right now, any age, any time. Just start now. Okay, know yourself. Okay, this is why being with God is going to be really important. Already becoming humbled is going to be really important. Okay, you can't be coming with ego. Can't be coming with thinking that you're bigger than the charts. You can't be thinking that you're right and the charts is wrong. Okay, and use the right tools. Okay, TradingView, big tool. Come for mentorship. Okay, I offer a free call where you guys can learn how to trade as well too. And then I'll put a trading plan together. Okay. And patience. Okay. Be patient. Even if you're making $10 from the market. Okay. Stack that up. Okay. And after you withdraw, so whatever amount of money that you withdraw, let's say you make $10. Okay. I like to leave 50% in my account of whatever I made. So I would only put $5 in my account. After that, 30% of whatever I withdrew needs to go to taxes. And that's how I break down my money. So I hope this presentation helped. Stay prayed to God. Keep learning. I'll catch you guys in the next one.